It's a positive start to the Asian screen as well, ahead of the all-important Bank of Japan policy decision.
In terms of FY25 guidance, they say that AUM growth remains on track with respect to 26 to 28% growth rate.
Supports come in at the 20-day moving average, which is 22,382.
Margins on expected lines have expanded by 200 basis points.
We have first rates coming up. The Nifty is starting at about 22,600.
Now, third one is a 1.5 billion run rate. We are fairly comfortable as a stage of maintaining that aspiration.
I think we had a bumper Q1, 700 plus million in deals in that quarter.
That most likely American tower company ATC was a likely seller in today's block.
For the market, things are very quiet actually, you'd have to say.
And by FY27, we expect to have reached the optimized state with an improved structural mix and a pyramid.
So the voting in these 5 seats of Kishanganj, Katihar, Purnia, Bhagalpur, Banka will take place till 6 p.m. in the evening.
WhatsApp has indicated before the Delhi High Court that it
Well, that's the day so far, and it's a little down kind of a day. This is Closing Bell. We'll get you the last hour today, the last hour for the week as well. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Mangalam and Nigel. It's the All Boys Show. Guys, hi, good afternoon.
Good afternoon, All Boys Show. Markets are taking a bit of a chill pill. I mean, it's down about 150 points for the Nifty. Yes, it has, the selling pressure has increased in the second half of trading session, but nothing really to worry till such time we're holding important levels. And the mid-cap index, that would have you believe that the bull run is well and truly on, Nigel.
Well, I've seen this in the past where what happens on the final day of expiry, the first day of the new series, you see some unwinding of that. So just, returning back to the mean, I would say. And that's why maybe, in fact, the Nifty is pulling back a little bit. You'll have to say this uptrend is intact, 22,150, 22,200. That's a crucial mark on the downside. So I think it's par for the course. Yesterday, you saw 300-point rally from the day's low. Today, we are pulling some part of that. But as Mangalam said, the breadth of the market is good. So your portfolios will be feeling much better. And I'll be feeling much better in the next 2 hours because I'll be into the weekend.
Not 2 hours. For you, it'll be a lot longer. 2. It'll be less than 2 for me. 1.5.
No, because Editors Roundtable
yes,
today...
I leave at 3:30.
At 3:30.
Okay, well, there is some intense calculation. 1 hour, 2 hours. Okay, actually, even on the Nifty, right, if you look at it, it's not so bad because it is largely private financials which are taking a bite out of whatever is happening out there. I mean, it's, the Bajaj Finance, Bajaj FinServ, Shriram Finance, these are all Nifty names, and these are the ones which actually mostly are, as I said, putting pressure. On the other side, you look at the PSU banks. So it's not as if all banks are down. The PSU bank index, the last I checked, was actually in the green. It's actually flat, right? So it is just large cap financials, private financials, which are doing a bulk of the damage today. Now for the Nifty, the 20-day, as of yesterday's close, comes in around 22,400. We're at about 22,430. The exact number is 382. The 20-day moving average. 22,400 is also an important retracement. So that's the immediate kind of support, which if the market stays above, closes above, I mean, there's very little chance that, you'd see anything very large on the downside from here. Support for the Nifty Bank, again, is the 20-day, which is 47,857. We're at, 48,279 right now. Broader markets are doing well, and, 0.5% to 0.75% kind of gain. In the broader universe, mid-caps and small-cap indices. Although you've got to say the market breadth is not evenly matched, but very, very little separating what is up as compared to what is down. 1,200 stocks higher, some 1,100 stocks lower. So that's the picture. But as we've been saying, look at that. I mean, it's almost there. Not very much different in terms of the number of stocks which are up and down. But what's going up, and this has been true for about a week, 2 weeks or so, what is going up always has more volume as compared to what is going down, where volumes are lacking. And that is the good thing that you want to continue to see. Mangalam.
Well, that's right. I'm just looking at the broader markets, actually. Select stocks continue to do a thing of their own. Exide, you just pull up the intraday chart of that stock. It's been in a firm uptrend after doing not much for the previous few years. Now, that's up close to 6%. We're talking about the Nifty moving to the low point of the day. Granules India, pull up the intraday chart of that stock as well. It's seen a sharp spike up. And Pfizer is the other one that I'm looking at. So, a big uptick is what you're seeing on some of these names. Pfizer volume's not too high, but some of these names, well, they're just rocking to the high point of the day. Atul Limited, we have those numbers that are flashing for you on the screen. On the top line, there was a big beat, but on the EBITDA front, there's a small miss out there, which is telling you that on the margin front, there was a bit of a miss. So the net profit number missed by a large mile, but in the operational parameter, it's a little lower than what the street was working with. Beat on the top line, but a miss on the margin front as well. Well, let's find out what you do in the final hour of trade. Mitesh Thakkar joins us. Hi, Mitesh. Good afternoon and good to see you in. Well, tell us, how do you read today's trading action? We're down 150 points odd. Buy the dip or sit out and focus on individual stocks?
Good afternoon, Rajit. So, yesterday my opinion was that we'll buy the dips, but when the dip came, we haven't bought it actually. The index should have seen continuation beyond 22,500. Not doing that is not making me feel very comfortable, though I think it's the breadth and the side counters which show a lot of strength, and that is where our trading positions are. But the index itself is showing very confusing signs. So avoid it until we get a clear picture. The key level on the downside for the Nifty would be 22,350 and then 22,230. So let's see, where it goes and stops or whether it stops or not. But for the timing, it doesn't look like, offering a very significant upside. And that is my worry. If there's no sign of an upside, I think, then taking long positions may not be very reasonable. And similarly, there's no sign of a big decline happening as well. So for the timing, just avoiding it. On the stock side, LTI Mindtree, I think, is given a good reversal from oversold levels after a prolonged decline. So we'll look at targets of around 49.30, 49.20 here. And recommend a buy with a stop below 47.30 to begin with. That's, another stock we had Coforge, and this is another stock which has done a correction, is reversing. The other stock on the list is Lupin, which is giving an intraday breakout. So buy here with a stop at 15.94 for targets of 16.60.
Right, Mitesh, we'll come back to you in just a bit. Meanwhile, just keep an eye on a couple of these other stocks which are spiking as well. Delta Corp, for instance, has now moved to the high point of trade, and most of the gains have actually come by just in the last minute or so, and it's a vertical spike that we're seeing on Delta Corp. There you have it, flat for most part of today's trading session. In just the last few minutes, it spiked about 3% from the lows as well. It's a bigger move. Let's see whether it's, usually stock price moves precede any news in Delta Corp. So we'll await for any development happening out there. Meanwhile, a couple of these other cash stocks doing extremely well too. We have Hoodco, which is up 12%. Vectors is up around 8%. Container Corp has been doing well all through today's trading session, just increasing their gains.
Well, Mangalam, just one point on these numbers, Atul Limited. The EBITDA looks like a bit of a miss, but I'm looking through the notes and the other expenditure is much higher. It's coming at around 192 crores. That compares with around 160 crores. And they have said to refer to note number 4. Now, with note number 4, they have taken a bit of a one-time, it appears. So there was a fire incident that took place at one of their plants. No fatality was there, but the company has written off carrying value of assets as destroying fire by around 35 crores. So I guess the street is adjusting for that. So if you adjust for that 35 crores, then the EBITDA number actually will be a little bit better. So it appears though the margin misses to the tune of around 100 basis points in comparison to what we are working with. There's a spike up in the other expenditure, and some part of that could be one-off in nature, which adjusted for that actually would make the margins look much better, which explains why that stock is now moved to the high point of the day, sitting with a gain of close to around 2%.
All right, so that's about Atul Limited. Let's shift focus to the tech space. That's been, the story of the day so far. Tech Mahindra, L&T Tech, both of them reacting to numbers. On the opposite side, the top Nifty gainer is Tech Mahindra. On the other side, the top F&O loser is L&T Tech as well. Reema joins in with the highlights of both these numbers. Reema.
Well, Tech Mahindra is clearly the star in today's trade because the street is excited by the new CEO Mohit Joshi's 3-year turnaround plan, where he is targeting achieving industry-leading growth by FY27 to improving margins from the current 6% to 15%, and this will be aided by a Project Fortuous, where they're planning cost savings of $250 million annually. According to Nirmal Bang, the FY27 EBIT margin guidance of 15% is higher than consensus expectations. So therefore, FY27 EPS estimates could get upgraded. Also, the company, according to the plan, wants to return 85% of the free cash flow to the shareholders, and this provides some sort of a downside support. And finally, valuations are not expensive for Tech Mahindra at 20 times forward multiple. But LTTS, that's L&T Technology Services, has taken a bit of a drubbing because of a margin miss, and particularly the margin guidance. The company is guiding for FY25 EBIT margins of 16%, more than a decline of 100 basis points. And this is because the company is front-loading their investments to capture the opportunity. In fact, the company also had an aspiration to improve margins to 18% by H1 FY26. But now, because of the investments that they have planned, this aspiration is pushed out over the medium term. And also, unlike Tech Mahindra, which is cheap, LTTS is expensive. The stock is trading at 32 times forward multiple.
Right, Rima, thanks a lot for that. So those are a couple of these tech names which are in focus. I'm looking at Aegis Logistics. Just pull up the intraday chart of Aegis Logistics. It's up around 5% today. But if you just look at this month, it's been a big mover. This week it's up 28%. This month it's up 41%. And in 2024 so far, it's up 80%. I remember, just about at the start of this month, we had IIFL initiating coverage on the stock with a target price of 500 rupees, saying that, it has consistently earned 60 to 90% EBITDA margins in both their liquid and gas storage businesses. And the fact that it's increasing their business handling capacity as well, they had a target price of 500 over the next 1 year or so. And now in just a month, the stock has crossed way past that. It's closing in on 633. As we speak, at the bottom of your screen, numbers from Shriram Finance as well. The net profit looks like it's a mild beat on expectations. Largely in line, 1946 crore versus a CNBC-TV18 poll of 1926 crores. We'll try and get in more details on that one. In the meanwhile, let's welcome Prakash Diwan joining us on the show as well. Prakash, a lot of stocks in focus. We have, Shriram Finance's numbers at the bottom of the screen. Tech stocks have been in focus all through today's trading session. A lot of numbers coming by. What do you like so far?
So, to be honest, the numbers that we've seen today just go on to say that the result season can be extremely bottom up in terms of behavior of stocks. We've seen, the divergence in the IT pack, but I keep on saying it's the mid-cap IT names, not the frontline large ones that will reward you. Of course, Tech Mahindra has promised quite a bit, but then it's a promise, and when you look at that report that says 20 times 26 earnings estimates, there's a almost 2-year gap in terms of what estimates could change with. So I'm a bit conservative. I look for value. I look for smaller things, changes which are happening, smaller needs, and I still like the gas sector. There's absolutely, you mentioned Aegis, and I was actually looking at what's happened to gas as a sector, whether it's Gas Authority of India, whether it's a Petronet LNG, whether it's Aegis, anybody and everybody who's adding value in the entire supply chain on gas is getting re-rated and will continue to do so. So that's a pocket. And there's some very smart moves in the PSU names that we've seen today. Of course, we saw the metal names and Nigel and I discussed it the other day. But I'm talking about some of the otherwise not talked about names like NLC, IRCON. They are the ones that are kind of seeing some very serious volumes. So I would believe there is some sort of a clarity in terms of picking up stocks on a more bottom-up basis rather than picking trends in the result season, because there's no clear trend that's visible. But we'll continue to wait for all the numbers to come through, probably another 15 days, and things will be much more clearer. But yes, a very, very interesting names appearing from a potential business improvement perspective.
Okay, all right. Hi, Prakash. Good afternoon. Good to see you in. Just take a look at the recovery we've seen in Shriram Finance. Now it's a nifty component, so it becomes even more important. The stock was down close to 4%. Now it's on the verge of being down only around 0.5%. We'll need to see the fine print, but I think for now we only have the net profit number. And on the back of that, we're seeing a big recovery. It appears it's more or less in line or a little better than estimates. I'm not sure whether there was a whisper number that was saying it's going to be a miss, but that stock has clearly recovered big time in trade. Abhishek will be joining to fill us in with more details on that. But for the time being, he's joining to tell us about Bajaj FinServ. Abhishek.
Strong numbers coming in from Bajaj FinServ with respect to their insurance business. If you take a look at the general insurance, the gross written premium is up about 32% YOY and 9.5% sequentially. Net earned premium is up 17.5% YOY and a decline of 0.85% sequentially. But PAT has grown by 18% YOY and and about 32.5% sequentially. The AUM growth over there is about 12.2% YOY and 3% sequentially. Life insurance business, now that's the heartening part. For third quarter in a row, life insurance business premium and momentum has been robust. So if you take a look, gross written premium is up 27.2% YOY and about 50% sequentially. Renewal premium is up 35% YOY and about 45.7% sequentially. The new business premium earned is up 19.9% YOY and about 54.35% sequentially. New business value is up 15.7% YOY and about 91.2% sequentially. So whenever you have a first time premium coming in the life insurance, they may or they tend to report lower profitability. That is seen this time around as well. AUM growth is healthy at 21.25% for the life insurance business and about 4.9% sequentially. So thumbs up to the great results that they have seen in their life and general insurance business for Bajaj FinServ. Back to you.
All right, Abhishek, we'll ask you about IDFC First Bank in just a bit. Meanwhile, the presentation of Shriram Finance is out, and it looks like strong operational performance out there. We have seen a recovery in NIMs quarter on quarter. So 8.99 has turned into 9.02. And the cost to income ratio also has declined from 27.08% to roughly 26.68% as well. The net interest income coming in at 53,360, and this compares with close to 50,939. That implies a growth of a little around 6%, so to say, on the NII. So there you have it, 5,300 crores, and this compares the poll of 5,135 crores. So on a lot of parameters, including a mild beat on the bottom line, it looks like a good set of numbers. That explains the kind of move that we're seeing on the stock from the lows. But Abhishek, we have IDFC First Bank numbers as well. What is the street expecting here?
Well, the key thing to watch in IDFC First Bank will be that deposit growth will be very strong. Motilal Oswal estimates a deposit growth of 32.8% YOY and 5.3% sequentially. Loan growth equivalently expected to remain strong at 23% YOY and about 3.8% sequentially as per Motilal Oswal. So net interest margin can improve YOY and quarter on quarter. Morgan Stanley estimates 41 basis point improvement in net interest margin YOY and 40 basis point on a sequential basis. Credit costs can rise marginally but remain under control or stable. So Morgan Stanley estimates credit cost of about 17 basis point increase on a YY basis and about 3 basis points sequentially. Asset quality largely expected to remain stable or improve on a sequential basis. In terms of our poll, NII is expected to grow at 25.2% YOY and about 5% sequentially. We are working with a PAT decline of 8% YOY and a growth of 3.2% sequentially. Back to you.
All right, Abhishek, thanks very much for that. And, we'll just come back to you for Shriram Finance as well, a little deeper look at the numbers. But Prakash is with us. Prakash, any thoughts? I mean, Bajaj Finance, of course, is the other one which is selling off. What would you do with that one? FinServ, you heard the details from Abhishek. And IDFC First, if you have a strong view. I mean, there's very strong growth there. I think there was an initiation from one of the foreign brokers two or 3 days back.
Yeah.
But the concern there has been on unsecured side, etc. Can that very high growth rates be sustained? But start with Bajaj Finance, if you will. Prakash.
So, Prashant, good afternoon. Bajaj Finance is very clearly, paying the price for premium valuations. If you have any disappointment in numbers, and this disappointment in numbers has happened after quite a few quarters, right? I mean, they've been able to keep upping their game. They've improved on a sequential basis very consistently. So I think the market probably also tends to realize that NBFC as a space is actually skating on thin ice, given the kind of regulatory forbearance that's very clearly prevalent. I mean, you have within the banks, you have within NBFCs, there are lots of them which are we expected to pull up their socks and actually improve on systems and governance. Here, what's going to happen is you look at why a Shriram Finance is getting rewarded. The primary reason is that companies, NBFCs, which are large and have a strong franchise on the deposit side, very clearly will continue to improve margins even without having to dilute quality. So, whereas an IDFC First, at the scorching pace at which they want to grow to kind of keep up with the rest of the pack, is something which is always vulnerable to risk. So, that's one of the reasons why it doesn't get those kind of price to book multiples as much as, some of the other aggressive banks like Axis or ICICI or even sometime Kotak used to get. So I'm just trying to, put things in perspective that NBFC is a space where you'll have to be extremely selective. It's not going to be easy because it's not a broad rally that's across the board. I would still prefer the larger banks and some of the PSU banks also doing exceedingly well. So there will be money that will shift from banks and NBFCs to probably, specialized NBFCs like REC, PFC and IREDA, because there's much more clarity in terms of growth and assurance of growth, which probably is not the case for some of the NBFCs.
Okay, all right. Prakash, I wanted your view on a couple of more stocks. Laurus Laboratories. We speak to the management off and on, and the smile on your face is telling me it, Prakash. It's not this quarter, it's the next quarter. It's not quarter 4, it's going to be sometime in FY25, 20% margins. What's your take on it? That appears there is a story because the street otherwise would not keep bidding up the stock. But what's your view at 440 rupees?
So, the reason I was smiling is Laurus is one name which is always associated with some story, which are always interesting, creatively put. And the market is currently, the street is celebrating the fact that there was an inspection without any observations. And that kind of is something that people will clutch on to as an indication of a bottoming out. But then there is a lot of inherent strength in the business model that they have. If you really ask me, it's just that they've spread themselves a bit too thin, trying to do too many things in a lot of the areas. Each of them is a very high growth area. So, you'll probably have them happen sequentially and not necessarily all parallelly. So it's a stock which will keep on sputtering in fits and starts. It's not something which is going to have a secular linear growth which you could enjoy. It's all thanks to the complex business model, right? I mean, it has 3-4 very significant verticals that it is working on. So I think the consolidation that's underway is good because it also kind of paves the way for the guidance to start kind of actually falling out in this true sense, because they don't have this whole clarity of the businesses, so that's why there's no guidance. But at least the revenue growth, which you are seeing, the kind of profitability that will potentially come from some of the verticals first and then the second and then the third, is probably what people are living with. I would like to sleep well, not invest in something which I seriously don't have very great visibility on. And in the pharma space, there's enough and more that's turning around. Even a Biocon, which was sleepy all these years, has turned around. So you can imagine. I'm not saying Biocon is a recommendation, but there are smaller names which are smartening up very well. I would go with some of those. Natco happens to be one of my favorites. It's done well. The numbers will be very, very strong in the next couple of years. So those are names that we would kind of look at doing.
Prakash, 30 seconds. We're going to take a break, but Biocon, heard anything? That's another one which is being bid up.
Yeah, I think there's some semblance of consolidation in that space with some of their potential partners that could probably make a big difference to the company. Yeah.
Okay, all right. I think you want to say more, so we'll take a break and come back and, get back to Biocon. But 6% now, so it's been a great week for Biocon. 18% on the stock right now. 308 is where that is trading at.
Just wanted to highlight, Prashant, CSB Bank. The stock was up 2-3% earlier today. It's moved to the low point of the day. The stock is now down close to 5%. It's getting a drubbing as we speak. I think results are due. So, the stock was up by, it was more than 405 rupees. So, from the high, it's seen a sharp downtick.
CSB reported the business update.
Yes.
And we spoke with Pralay, right?
Yes.
I mean, after the numbers came through.
Yes, we spoke to Mr. Mondal and he was telling us about the, the way they're expecting to grow continuously better than what the industry grows, margin stable. Gold is still a fair bit of their book. But maybe Abhishek is checking on those, on what's going on there, if there is any change at all. So, let's do one thing. Let's slip into a short break. When you come back, well, we'll continue our focus on markets. We'll keep discussing a lot of stocks with you. But as we take that break, we also have an important announcement to share with all of you. Our upcoming live personal finance webinar, CNBC-TV18 Accelerate, will feature none other than the top market experts, Nilesh Shah, MD of Kotak Mahindra Bank AMC, who will answer all your questions on managing your finances. and also conducting a special masterclass on what you do with your finances and the mistakes to avoid. CNBC TV18's Accelerate Personal Book Finance Handbook with Sonia Shenoy, who will feature 3 well-known experts, and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join in on 11th of May at 9 a.m. We have limited seats. Scan the QR code on your screen to register. Welcome back. Well, we have CSB Bank. Actually, they have declared their numbers out there. I'm just trying to pull out some details. Abhishek will be joining, and I'm thinking shortly just to help us out with that. The absolute NPA and the absolute gross NPA, I think that's moved up a little bit on a sequential basis. So that could be one reason out there. So asset quality appears that it's worsened a little bit. The absolute number actually is up, on a lower base. So both the gross NPAs and the net NPAs, that's one factor that I can cite out there. So let's wait by. Abhishek will be with us very, very shortly to tell us about those numbers. But let's run you through Vedanta. Good set of numbers in the past quarter. The EBITDA number was better. You look at both the two verticals that we normally track, that's aluminum as well as oil and gas. Both of them did better than what we were working with. The sweetener was that, in fact, we had deleveraging as well that did take place. So you had a good quarter. Net debt comes down by close to 11%. The street likes that. The cost of production for aluminum has come down to around $1,711 per ton. And they're saying that they are lowering that guidance as well. So the cost of production will go even lower from here. Keep in mind, this is in the backdrop of aluminum prices moving up. So positive out there. And also in the coming year, we'll like to see the demerger that did take place. Nuvama, Citi, CLSA, all of them, they believe that this is good. Nuvama, in fact, they have gone ahead and raised the target price. So has Citi and so has CLSA. All those calls from the brokerages come up in the screen. Prakash, what do you make of it? Vedanta at around 400 rupees. Some say that maybe, in fact, this time around, Mr. Agarwal is not going to make any mistake. He's got this one covered and he'll do the right things. If he does that and the commodity cycle is strong, then, the stock could have more legs. Are you in that camp, or you will say, it's too risky, you don't know what's going to happen next, so I'd rather stay away? What's your take?
So Nigel, we discussed, how Vedanta and Hindalco were very well poised to ride this commodity upcycle. And Vedanta happens to be something that could reward you in the short term, because you really don't know what happens in the long term with a company like that. I mean, there are too many twists and turns that we've seen in the past. And if anecdotally that is to go by, there could be surprises with store which we really don't know of. But as of now, all the four legs on which it's running are actually very strongly placed. As you mentioned, whether it's aluminum, copper, oil, and of course, it's to a large extent, the byproducts from Hindustan zinc and silver and all of that also adds up to this whole juggernaut. But it's just for the short term. End of the day, you need something which is much more secure, and Hindalco definitely features there in a very distinctive way. And we've seen the sharp recovery that's happened in the Hindalco stock post the earnings. This time around, if the earnings again assuage all the misgivings around the capital expansion in the US, I think the stock will still get some more legs. So, you want to play a tactical kind of a trade, then of course Vedanta is still got momentum, but Hindalco is the one that you would stick to for the next couple of years, expecting the cycle to reward you through that. So that's a play you would make. But yes, both of them seem to be in the right spot at this point in time.
Meanwhile, just keep an eye out on Bata. Bata is the stock that's spiked a little bit. They've just told the exchanges that they are looking at monetizing some part of their excess land in Faridabad for about 156 crores. Not too much in the overall scheme of things for Bata, which is why we saw a bit of a spike in the stock. But in a competitive environment at a time where consumers aren't really picking some of their products, and the company is also in the middle of repositioning from a mass brand to perhaps a mass premium brand, maybe some bit of excess liquidity and sharper, more efficiency would do well for them. Maybe, what do you call them, tightening the shoelaces a little bit. But I'm looking at two stocks in particular, both of them from the new age space. We have Honasa, which has moved higher. It's been a good week for the stock. It's actually up 10-11%. Two things happened this week. One was their second brand, the Dermaco, crossed 500 crores in annual revenue run rate. And secondly, HUL's results, took place this week. And they said that three things are doing extremely well: premium, natural, and D2C. Well, here's the three things that Honasa also works on. So that explains why it's growing faster than the industry itself. But the only liquidity event next week is on May 2nd, when nearly 50% of its liquidity, outstanding shares which are locked in post the IPO, come in for opening. So let's see how that pans out. The other one is Zomato, because today in a first we had Goldman Sachs actually put a value to Blinkit which was higher than the inherent value of Zomato as well. So what they've done is, the only thing that is delivering faster than Blinkit's own products is the value at which it is rising. Last year, same time, Goldman Sachs had a price of around 16 rupees per share to Blinkit, and in less than a year, it's increased all the way up to 119, as compared to Zomato, which they value at 98 rupees per share. And at 119 rupees per share, Blinkit is about $13 billion, which is over 20 times the price at which Zomato acquired Blinkit in April 2022. So both these stocks, good day for some of these new age companies.
Well, that's right. At the bottom of the screen, actually, Mangalam, but we have Motilal Oswal that's come out with the set of the numbers, and those numbers look beautiful. Explains why the stock has moved up close to around 6%. It's already done considerably well, and now, in fact, the stock just taking off, the net profit number and the revenue number, both of them looking superb.
But there is a bonus as well, Nigel. There's a 3:1 bonus. There was a bonus expected. The board was expected to take up a bonus issuance. And I think that has also come in. We'll put out the flashes on that as well. And I think in this profit number, perhaps, look at the jump. I think this has some amount of carry from their fund which they run. That I think that would explain why you got such a large jump compared to same period last year. I mean, it's in multiples of what they've done in the fourth quarter in FY23. So that's Motilal Oswal. Sharp jump. And of course, I mean, the stock's done phenomenally well over the last 1 year or so.
The stock of the week, Vodafone Idea. In the last 10 minutes, the stock was down a percent or so. Just take a look at it. 14.5 rupees on Vodafone Idea. Big up move is what I'm saying. More than 14 rupees, beg your pardon. It's seen a big spike. Just take a look at the volumes. In this hour itself, it's moved a good lot. And 361 is the other stock that I'm looking at. 50 lakh shares got traded out there. The stock has seen a sharp downtick. I think the numbers look quite good. But on 361, we did see a big block, 50 lakh shares getting traded. Explains why we're seeing a big reaction out there as well. But time for our favorite segment, D-Street Chatter. Nimesh has been waiting by. He joins us to fill us in with more details. Nimesh?
Hi, Nigel. So a bit of a down day, largely on the back of global cues, but also a lot of the earnings have been quite disappointing. So that's been a key reason why there is a Friday factor as well. The Nifty is down more than 100 points. It's largely the financials which are dragging the markets down. So right from Kotak Bank to a lot of other large private banks are under pressure. Nifty Bank itself is down close to 0.5%. So that's been a bit of a pain point as far as markets are concerned. Again, a mixed day as far as flows are concerned. There are specific sectors which include selective metal names as well as pharma stocks which have done well, and they've been well bid as well from the larger institutions. So net last day a bit of a consolidation, but I guess earnings is going to be a big driver for the markets, at least in the short term.
Nimesh, stocks always an interesting list. What's on your radar?
Well, so the first stock on my list today, Prashant, is GMDC. That's been buzzing into it on large volumes as well. I understand a leading domestic mutual fund has been an active buyer in GMDC, and that explains the big move. in that stock in today's market. So that's the first one. The second name is Hudco. Big reaction to the stock, big volumes as well. I understand one of the leading HNI investor who's been an existing holder, he's added further to the holding, and that explains a big move in Hudco as well in today's market. The third stock is Zomato. Mangalam nicely explained about the big report from Goldman Sachs. They've raised the target price as well, but the stock hasn't reacted much, and that's largely because I understand there are block bids being offered from some larger FIs in today's market, and that explains that despite such a big report and all, the stock has been relatively subdued in today's market. And the last one is Protein Egon. I've been tracking this stock for a while now. Again, I understand there's going to be a large block deal very soon. Likely a clean out trade. Remember a few weeks back, 361, which is the fund which owns a large stake, they sold out close to 5% stake. Now I understand there's going to be a clean out trade from that particular fund again. So that's something to watch as far as Protein Egon is concerned.
All right, Nimesh, thanks a lot for laying down a whole lot of stocks, whetting our appetite for any of the news that may come by in the names that you're speaking about. Meanwhile, just keep an eye out on Motilal Oswal. There was some, fair value change that you have. Yeah, that's the flash. They have a fair value gain at around 424 crores. This compares to the loss of about 40 crores. So that explains the big jump that we're seeing in the net profit year on year from about 167 crores to close to 725 crores. But be that as it may, quarter on quarter as well.
This is basically marking to market some of their investments that perhaps has resulted in this jump. So I think typically you would have to look sort of X this. That would give you a real sense of what the operational numbers are looking like. Because I mean, we'll actually sort of discuss this in greater detail. We'll have Ramdev Agarwal, Chairman and Co-founder of Motilal Oswal Financial Services, join us in just a bit. We're back with that. Welcome back. As promised, let's get to talking about Motilal Oswal Financial Services in greater detail. Ramdev Agarwal is chairman and co-founder of the company. He's joining us right now. Ramdevji, good afternoon. Great to have you with us here on the program. And congratulations, what can I say? Across businesses, it's been a very, very eventful year, F524. Your share price performance is just astounding. I mean, I thought we just started the year and the stock is up 100% plus. Of course, I can't ask you to explain what's happening with the share. I can ask you about the business, so let's do that. The big jump in profits that we've seen, right? At the net level, there is basically you mark to market some of the assets that you hold. That's a single component. Could you explain that?
Yeah, I'll explain that. See, basically, Motilal Oswal is always about two things. One is the operating profit from the businesses, capital market businesses, all the segments, and there is a large treasury and there is a mark to market. So operating profit has grown by 60%. So that's quite a bit of performance in the Q4 to Q4, I'm saying. So operating profit is up by 60% quarter on quarter. And say Q4 operating profit is about 495 crores against comparable 298 crores. So that's the number to compare against 300 crores last year Q4, about 500 crores this year. So that's the number to compare. And then mark to market last year in this quarter, there was a mark down of about some 50-60 crores. Against that, we have about 300 crores of plus, and that makes it about 668
800.
crores,
Yes, you were.
100 crores kind of PAT for this. But still, I think the overall performance, if you see quarter on quarter, it has been a sustained build-up across the year. So don't look at just one quarter. If you look at the total performance for the year, the operating performance, I mean, mark to market can be down or up because of the markets. That's not in anybody's control. But the operating performance, that has really shot up in this year. Our revenues, our profits, I mean, revenues have gone up by 33% from 3,800 to 5,000 crores operating revenue. And operating profit after tax has gone up from 1,100 crores to 1,550 crores. So that's the big change which has happened, and that momentum of capital market across the businesses. I'm saying whether it is a broking, whether it is iBanking, wealth management, asset management, private equity, all over there is a good momentum, and it is continuing in the current year. So that is the thing to focus on. Mark to market can be anything. I mean, depending on what happens in the market.
Right. While capital market and all these businesses are doing extremely well, not just for your company, but you've also been a proponent of this theme as an investment theme going ahead for the next few years, given the sort of rise that we've seen in demat accounts, etc. The housing finance business, that hasn't grown as much this time around, and that's been one of those speed bumps for you over the last couple of years. What are your plans to increase or improve your performance here?
Yeah, so new management team has, brand new management team has come in. And actually, if you look at the Q4 performance of housing finance, has been brilliant in terms of collection. I was more excited about the collection part of it. The disbursal has seen major pickup, and they have very aggressive plan for the next year. But yes, I mean, that is one quarter performance by the new management. And we hope that the performance momentum continues into the next year. So I think the drag which was there in housing finance company for last 2-3 years, I think that I hope we have got over the hump.
Okay, all right. Hi, sir. Good afternoon and good to see you in. Nigel on this side. I just want to ask you about the housing finance. On that arm, there was an IPO that was planned, I think, and the street was waiting for that. What's the update there?
No, at least on the board meeting, there was nothing about the housing finance.
But is that something that an IPO at some time you would like to do it, right? At what scale, at what time would you like to do it?
No, right now, since it is not there on the board, nothing is discussed. I'm not at liberty. Actually, there's no thinking right now, because we want to focus on getting momentum right, let the management team settle. And then, I mean, when you go public, you are inviting, people, money from the public at large, that to at market price. So we have to be extremely responsible for when to take money, at what price to take money, whether to take at all. Because we can take all the risk of stabilizing a business, but I don't want to do the risk of stabilizing the business with the outside money, clearly.
Got it. No, that's fair enough. Now, could you tell us, so you said new management, right? Yesterday, there was a release saying that there's new management team at the asset management side as well, the AMC side as well. HFC, you said there's a new management team. Is that the kind of a new, does that mark a bit of a shift, new direction for businesses? That is one. And second, could you tell us across capital markets, asset management and the housing finance, guide us for what FY25 may look like? Some numbers?
Yeah. So Prashant, I mean, first about the asset management company, they were the guys who were managing it. Just that Naveen was the overall leader over there. So he's a very critical resource, Naveen. We cannot afford to. I mean, we have a lot of more higher responsibility at a board level. So he has been pulled back at a board level, and Pratik Agrawal and other changes like Niket becoming Niket and Akhil. They're the guys who have been running the show. They have been just upgraded to the full leadership role from a slightly subdued leadership role. Now they have the full leadership role. So that's what has happened. But there's no change. Naveen will still from the board will oversee the operations here. So I would say that it is more of an upgradation and facelift at AMC level. But other business like housing finance, I think truly there is during 23-24, we have a completely new management, which are already installed 6-7 months back, and now they are kind of finding traction.
And guidance for 25?
Yeah.
Some
so,
guidance? Yeah.
Yeah. So, Prashant, I think if you see the deck, in fact, I was surprised to see the kind of build-up which is happening quarter on quarter in last 4 quarters. I mean, every single business is becoming bigger by the quarter. I mean, there's no seasonality. Every quarter there is a quarter-on-quarter growth for last 4 quarters, and I see even the current quarter shaping up well. Right now we have uncertainty of elections and global geopolitics you are seeing. So my sense is because the market is expanding, we have already talked about so many times about the retail equity revolution in India. And we are leading right from the front because we cater to almost 98% of the pin codes and things like that. So I think that pressure is not only building the retail broking and asset management, but also it is having a much more wider second order effect in wealth creation in terms of private equity, iBanking, IPOs, foreign offering, block deals. I think everything to do with the capital market is happening, and there is a major shift from the fixed income deposits to the so-called financialization to asset management, mutual funds, and those kind of things. So we are at that we are the beneficiary of this major trend, and I see the Q1 or next 4 quarters at least should be tracking as well as what happened in last 4 quarters.
Okay, all right. Got that. I think without going into numbers, that gives us a fair sense of what you're looking at. Now, since we have you, and with your permission, Ramdeji, we can maybe talk about markets a little bit, right? The numbers are done, and you talked about one big theme that you've been bullish on for a while, which is financialization, and you're very much part of it. So tell us, I mean, first of all, are elections a big deal? I mean, I remember talking to you before state elections, and you said that post the elections we will get a big rally. We got a big rally. November, December was truly a very large move. What's the sense now, where we stand?
I think not so much for people like us. Business goes on, the country story goes on. And I would think that 99% or 99.9% there is a continuity going to be, whether it is going to be 350, 400, 405. I mean, those are numbers, but I think the continuity is more important. And if the continuity is there, in my mind, there is no change per se. But it's a big event for a lot of people, particularly for the foreigners. I mean, they own about 15, 17%, $750 billion worth of stocks they own. And they're all liquid, front-running, all the blue chips they own. So their opinion matters, and they will definitely, foreigners will definitely would not like to take the event risk. So they would come back. They would come back to India. Hopefully, they'll revise their opinion about India because what they're selling today, maybe for a month or two, or maybe a quarter or something, they may come back and say that, okay, we join the forces and buy. And at that point of time, I think the trajectory of growth of the sensex or nifty would be somewhat interesting.
Okay. You know, I just want to talk about Vodafone Idea as well, where you were one of the very large participants. What do you see there with Vodafone Idea? And I mean, of course, I'm assuming you expect to make a lot of money with that investment, but just talk us through what made you bet big there.
I would not like to get into stocks because it's controversial. I don't know whether they're buying, selling. I mean, you got to ask the fund manager and the Pratik Agrawal, who are the, he's CIO and now running the business. So they would be, they are the decision makers, and please speak to them. I mean, I don't want to get into details out there.
Okay, no, but it's there is repair in the sector. That much you would agree with this, right? I mean, that we can take. Yeah. Yeah.
I mean, one thing I can make a statement that is there's a fundamental shift that the ownership of the company is not anymore just a private sector, another multinational private sector or domestic private sector company. It is a government-owned company. So the behavior, I mean, and survival of that company is also almost granted. So, and the government authorities have gone on record saying that they want to see 3 viable companies in telecom. So I think a lot of action is awaited immediately after election in the sector. And that's why the sector itself is buoyant, not only this company, but sector itself is buoyant. And in that context, the fund managers must have taken their own stance.
Right, Mr. Agarwal.
Just one more question, Ramdev. I mean, I know you don't want to talk about stocks, right? But if I can sort of tempt you to weigh in on the... I mean, you've talked about this before, Zomato being a very big idea for you, and you expect this to be a very large company over the years. Swiggy's filed for an IPO. I mean, the issuance should come. This morning, Goldman Sachs put out a report saying that they see the value of Blinkit to be much higher, higher than Zomato itself, the food delivery business. Just your thoughts on how this is going to evolve from here.
Yeah, I agree with that because I have seen it in my own house. The whole buying pattern of the groceries have changed. And in fact, I spoke to a lot of our assistants here, those who come to me while coming to CNBC and all. And they said that they use it so often. I mean, I was thinking that it's a discretionary, but actually for the girls who are working here, for them it is a basic necessity to support their parents and all. So I think it has a wider application as we go forward. And now they are talking about platform fees and things like. In fact, instead of giving discounts, they are talking about actually charging premium for the delivery. So I think it's just an evolving scenario. Customers are very happy with their services, and it's becoming larger, and the addressable opportunity is so big. So I think once they start making money, then I think some kind of a valuation will emerge, and I remain bullish on this entire concept.
Take that point, Mr. Agarwal. What was earlier an optionality has now become an important value driver for Zomato. Thank you so much for joining in, speaking beyond just your numbers, but wish you good luck for not only your investments, but for the company as well for the next 4 quarters. If the last 4 quarters trend is something to go by, you believe that the next 4 quarters will be good as well, with improved performance coming in your housing finance business. So that was Motilal Oswal. The stock doing well, has seen a big move already, good numbers coming in, continues to hold on to those gains. But as we move towards the end of trade, let's get in Mitesh Thakkar once again for the tomorrow trade or the weekend trade. Mitesh, what are you going to buy today for a reverse trade 2 days later?
So I have one BTSC and one STBT. Maruti is something, which I would recommend an STBT with a stop at about 12,735 for a target of 12,650. And on the other side, on the buy side is Marico. I think that's a stock, which has done well and is closing good. So buy here with a stop at 512 for targets of 526.
Okay, all right. Thanks for that, Mitesh. For the time being, we'll slip into a short break, come back. We'll continue to focus on the markets and stock-specific action. Stay with us.
Welcome back. A couple of stocks of the last 30 minutes have been CSB Bank as well as Shriram Finance. Shriram Finance, Nifty company up 7.5% from the lows post their numbers, mildly in the green, mildly in the red, but it has seen a big recovery from the lows. CSB Bank, on the other hand, was flattish for most part of today's trading session. As soon as the numbers hit the screen, the stock's down 4%. What explains these divergent moves on both these numbers, and what are the details of these numbers? We have Abhishek with us. He's read through the numbers. Abhishek, tell us both about Shriram Finance and CSB Bank.
Well, to begin with CSB Bank, asset quality sees massive deterioration in a quarter where lenders see improvement in their asset quality. Now, CSB Bank has seen massive deterioration in their asset quality. Slippages are up 239% quarter on quarter, 122 crore versus 36 crore. Annualized slippage ratio is at 2% versus 0.64%. So, gross NPA in absolute value is up close to 30% quarter on quarter, and net NPA is up 78% quarter on quarter, which explains that provision coverage ratio might have declined as well. The percentage with respect to gross NPA and net NPA may not look, much of a momentum because the advances growth or denominator factor has kicked in. Otherwise, in absolute value, massive deterioration in their asset quality sequentially. Shriram Finance, strong quarter over there. The NII is up 20% YOY and 4.75% sequentially. So the net interest margin is at 8-year high of 9.02%. At a time when you are expecting cost of funds to come and impact the net interest margin, over here we have a lender whose net interest margin has improved. So operating profit growth is at 26.8% YOY and about 5.9% sequentially. Gross NPA ratio and net NPA ratio have declined on a sequential basis. PAT has come in at 1,946 crore, which is up 48.7% YOY and 7% sequentially, which explains that their return ratios, both the ROA and ROE, are one of the best that you are seeing in last 8 years or last 8 quarters or 2 years. Back to you.
All right, Abhishek, that explains the divergent moves on both these counters. Shriram Finance, good asset quality, NIMs expanding, and weakness in asset quality taking CSB Bank down. A bunch of other stocks which are also spiking from the QSR space. We have, Westlife Food, the ones that operate McDonald's in the southern and the western part of the country, seeing a big spike of almost 7% on the share price, though it's still about 15% away from its 52-week high. QSR demand has been rather weak over the last few quarters. We heard from the management of Tata Consumer speaking about demand for their Starbucks, offering being a lot better in March and April. So if there is any recovery out there, we will keep an eye out on that. Tata Consumer by itself too has recovered a little from the lows of today's trading session. Let's welcome Hemang Jani as well. Hemang, a big move is what we're seeing in a lot of stocks. The stock of the month definitely has to be Voltas. It's up 2% today, but this month it's up around 40%. We heard from the IMD earlier today speaking about a heat wave in a large part of the country over the next 2 days as well. After this move, would you look at consumer discretionary, or what are your thoughts?
Yeah, Mangalam, good afternoon. I think massive re-rating and stock price surge in Voltas. I think two main reasons. One is that on the AC side, the numbers have been good. There has been a significant market share gains, and also their other divisions have contributed quite well to the overall numbers. So the sense one is getting is that because of the stronger growth and the way the new sales is being reported by real estate companies, there is a sense that you see a good growth. Voltas having seen such a big up move, we would be more comfortable buying into Havells at this point, which has not seen such a strong move as yet. And the storyline is pretty much similar with a much broad-based product categories. So Havells is something that we prefer at this point of time.
And would you have a thought on Shriram Finance and CSB? Abhishek just spoke about the numbers that came by.
Very strong numbers. I think Shriram Finance, there was a bit of a swing in the stock price today, but if you look at the absolute numbers, whether it is net interest margins, the pre-provision profit or the PAT, there is a beat of almost about 12 to 15% when it comes to the profitability. So we think that this is making lot of sense for one to really look at buying into it. We think that there is a case for 18 to 20% kind of an upside in Shriram Finance based on these numbers. We have to wait for more details from the con call.
All right, Hemang, we'll keep it short this time. Thank you for joining in and giving us a view on a couple of sectors. Consumer discretionary, prefer Havells over Voltas. And you like Shriram Finance, strong numbers coming in the stock. Ending the day with just a bit of a green tinge, a little over 2,500 on that counter as well. We'll wind down the day, and not just the day, we'll wind down the week as well. It's been a very interesting week for the markets itself. For the Nifty, we've seen a decent gain of about 1.5% this week. From the lows last Friday, the Nifty has actually rallied about 800 points, so that's good. However, it had to give up some gains in today's trading session, so down about 120 points for the Nifty. The sensex closing with a near 500-point cut. The Nifty Bank as well, just around that 48,300 mark. What really stood out in today's trading session were the mid-cap stocks and the mid-cap index as well, ending at yet another record high. So the mid-cap index goes upwards of 50,600 at an index level, a gain of nearly 1%. Towards the end, the market breadth, however, came closer to the even keel, where about 1,100 stocks each were on both the advancing as well as the declining side. So let's talk about some of the gainers. The top Nifty gainer, of course, has to be Tech Mahindra. Good numbers coming in, good turnaround plan by the new CEO. That stock up around 8%. Giving it company on the way up was Divi's Lab as well. Ended the day very well, had a trend day, up around 5% for that stock. LTI Mindtree pulled back as well, up around 3.5%. On the way down, Bajaj Finance results not to the street's liking, down about 8% for that stock. Bajaj FinServ, by virtue of its holding in Bajaj Finance, also ended about 4% lower, 3% lower for IndusInd Bank, and 2% lower for Nestle as well. For the broader markets, we had GMR Airports, Container Corp, Dixon Tech, and Biocon ending higher, while on the way down, we had L&T Tech Services and ACC. So with that, we wrap up on this edition of Closing Bell. But you don't go anywhere, because our offering of Friday, which you really like, which is Editor's Roundtable, now comes up right after this short break at 3:30 instead of 4:30. The new time, same show, great expertise. Stay tuned.